Good evening, sir.
Good
Yeah,
evening.
we can start now. Good evening. How many of us? Okay, 9. I think we can start. The network is a little bit stable now. All right. Happy New Year, everyone. So I will be the facilitator, the second facilitator for audit and assurance. Okay. My name is Adebayo Desalu, and today we are looking at chapter 3. As I've already shared the material and I've given a little insight into what we'll be having today. But practically, what we'll be discussing today evolves around what is obtainable within the audit firm, how they go about some of their activities, as well as the uh, the manner in which the Companies and Allied Matters Act 2020 affect or impact the practice of audit and assurance services in Nigeria. So that's what we'll be looking at today, right? Um, Now, I said we are looking at what's obtainable or some of the things that is obtainable in an audit firm. So first of all, we need to understand that audit firms, they are organizations that are established for profit making. I hope you understand that. They are not NGOs, they are established for profit making. So they are expected to make profit at the end of the day, right? So I just want to I just want the other students to join. I'm continuing. I want to say that the class has started. Network. So as I was saying, I said that the audit firms are established for profit making. So one of the things you need to know is that when you are talking about making profit, is to be able to market your services, because audit firm, they render services. So in order for them to render services, there are certain requirements that they need to comply with, right? And those are the things we'll be looking at now. So we are looking at advertising and publicity as it affects the what's it called, the audit firms, okay? And mind you, when you talk about audit firms, we are, or accountants or chartered accountants or auditors in audit firms, we recognize those people that are working there as those people that are in public practice. Okay, they are in public practice. Why those that are in the banks or work in other organizations aside the audit firm, they are the ones they call accountants in private practice. So I just need to clarify that as we continue. Now, as I said, for an audit firm to be able to market their product, their services, right, they need to follow certain requirements. And those are the things we are looking at under advertising and publicity. So these are some of the laid down rules for audit firms when they want to advertise their services to their clients. One of the things they need not to do is that they must not bring into disrepute the professional body, the firm, and the profession as a whole. What that implies is that at any time you are trying to advertise your product, the audit firm should be an audit firm of repute. Repute means that it should be an audit firm that is known for always being upright, doing the right thing. So if the audit firm is always doing the right thing, that means that in a way, the audit firm is not bringing disrepute to the professional body, which is the ICANN itself. Okay, and also the profession as a whole. So they will not say that, oh, look at the way audit firms, all of them, they are the same, they behave the same way. But if the audit firm stands out in terms of standard of practice, in terms of service rendering and delivery, then in a way, it is a good ambassador of the institute. That's when I talk about institute, I'm talking about Institute of Chartered Accountants of Nigeria. So at any time they are trying to publicize their services, they should always remember not to bring into disrepute the professional body, the firm, and the profession as a whole. Number two, the audit firm should not make exaggerated claim for services offered and qualifications possessed or experience gained. Okay? It should be honest and truthful and not misleading. What that means is that as an audit firm, you should always be truthful. It is the service you can render or you have been rendering that you can always advertise on. Now, if you don't have competence or expertise in a certain service, you don't need to profess that you have competence in that area, because if you do so, what you are doing as an audit firm is that you are trying to exaggerate the claim for services offered, which is detrimental to the firm and the professional body as a whole. So at all times, you should always stick to what you do. So for instance, let's say you are trying to prospect for a client, and the client says that I only want to work with audit firms that can perform what we call forensic audit, okay? That can perform forensic audit. And you know that you don't have the competence or the expertise to carry out, to conduct forensic audit. So in that instance, what you need to do is to say that, oh, sorry, we can't render that kind of service, or we don't render that kind of service, so that it will be clear, so that they will get to meet other audit firms, rather than for you to be deceiving them that you can render that service, whereas you don't have the competence to doing that. That's what we mean. Okay. Number three, they must not discredit the service provided by other firms or make disparaging references to unsubstantiated comparison to the work of another chartered accountant. What does that mean in a nutshell? What that means in a nutshell is that what you need to notice this. In accounting, you don't refer to yourself or you don't refer to your audit firm as the best audit firms in Nigeria. It is not allowed. And why did I say so? Now, if you say your audit firm is the best audit firm in Nigeria, what that implies is that you are saying that other audit firms in Nigeria, they are secondary or they are second to none. And that is not acceptable. That's what we mean by making disparaging references to unsuggested comparison to the work of other chartered accountants. So you shouldn't make, please mute your mic, Mr. Joseph.
Oh, sorry, sir.
Yeah, thank you. So what that means is that you shouldn't bring into discredit the service provided by other firms or make disparaging references. So for instance, our center, that is the Equity Professional Limited. If I want to advertise our services, and I will say that Equity Professional Limited is one of the leading or one of the best ICANN tutorial centers or institutions around or in Nigeria. I cannot say we are the best. If I say we are the best, what that means is that all the other tuition centers or tuition houses that we have around Nigeria, that means they are not doing good. They are not doing better. Their services are poor. That's what it means. When I say we are one of the best, that means that we have recognized the fact that other audit firms also they are contributing their quota to the development or advancement of the accountancy profession. That's what we mean by making disparaging references. So you shouldn't say you are the best. You can say you are one of the best. Like I said, this particular statement I'm saying now is peculiar to accountancy profession, because some of what we say that, but you see when you're on radio or you are in other areas, you say we are the best. Okay, there are some stations, radio stations, usually they say they are the best, they are the first in all of those, they do all of those things. So that is acceptable in their own field. But as far as accounting is concerned, in Nigeria, you cannot say you are the best audit firm in Nigeria. You can only say you're one of the best, you're one of the leading, you're one of the foremost. You can say all of that, but you cannot say you are the best. That's what we mean by that. Aside from that, also, the audit firm, in the course of trying to make publicity and advertisement, right, they should not break any locally recognized code of advertising practices. They should not break any locally recognized code of advertising practices. So what that implies is that in Nigeria, for instance, we have APCON, that is Advertising Professional Council of Nigeria, Advertising Professional Council of Nigeria, right? Now they have their code of conduct, okay? So at all times, aside from all the ones that I've read out, I've explained, there's a need. It's also important that you comply with the code of the Advertising Professional Council of Nigeria, their code of conduct. That's what that's what it means. Okay. Then also your information that you are sharing in trying to market your services should not be misleading. Okay. For instance, if you know that you don't have certain clients in your portfolio, don't say that they are part of your client. Do you understand? Do not say that they are part of, for instance, now, some of your clients will say that you want to see your clientele, but you don't know that you know the clients you're talking about, you know the caliber, you know the taste that he has. So let's say now you look at you have sized up you have evaluated, you have assessed the prospective client. I know that you want to certain names, certain brands, certain companies on your clientele, right? So, for instance, let's say that you know you have assessed the client, and you know that you would like to see some companies like top-notch companies like, let's say, Zenith Bank, let's say Mobile, all those kind of companies. They are not part of your client portfolio, but you just want to overly impress that client to patronize you. You not say that, oh, do you know that we also work with or Zenith Bank is one of our clients, or Mobi is also one of our clients. Whatever information you are passing, ensure that information is not misleading. The next also is that you must not offer discounts. Discount here means that as an audit firm, there are a range of services you can render to your clients, ranging from recruitment to outsourcing of functions or services, right? Bookkeeping and accounting, tax advisory services, right? All of that. You can render all of them to your clients. What we are saying here is that if you are rendering all of these to your client, do not at any point say that, okay, if I can render two of these services to you, the third one I'm going to do it for you at a discount. That should not happen. That's what we mean by that you should not offer discounts. Okay. Then lastly, you must not make comparison with the fees of other service providers. So don't say that, oh, the client is trying to negotiate down the audit fee. And you say that us, we are even charging 5 million. Go to KPMG, they charge 10 million. That conversation is not warranted and it should not be brought up. That's what we mean. You should not compare the fees with other service providers. So whether we are talking about here are other audit firms. So that is very, very important. Okay. Does anybody have any questions on this aspect before we proceed? Any question? Any comments? Any observation?
Yes, sir. I have question as regards
Please go ahead.
As regards the point that says there must not be offer of discount.
Yes.
Is it that in audit practice there is a uniform tax amount to be charged from clients, a benchmark at which there should not be a fall short by other practicing firm?
Is that your question?
So did you get my question?
I got it. Is that your question?
That's
the question, right?
Yes, sir.
Okay. What I said is this. As far as I know, right? There's no fixed rate or there's no fixed fee for any service rendered by either an audit firm or by a chartered accountant. That is why when you become chartered now, there's nowhere in the ICANN code of conduct that says that this is the amount you should collect or you should receive or you should settle for as a chartered accountant. For instance, there is no way that they say in the ICANN records or documentation that once you're a chartered accountant, the least you can accept as an offer in any employment or any engagement is 1 million naira. There's no way that is stated. That is why that you see that there are some chartered accountants in this country that I'm talking about now, that their pay is not more than 100,000 naira, and they are chartered accountants. Okay, So what I'm saying here is this: no matter the fee you are charging your clients, that fee, you cannot give it to them at a discount. That's what we are saying. For instance, when you give somebody a discount now in a market, most times you always put it in the on the invoice, on the face of the invoice, that less 5% discount, less 10% discount. What I'm saying here is that that is not permissible in the practice of audit firms or accountants, audit and assurance services in Nigeria. That's what I'm talking about.
Okay, sir.
Is,
No, noted, sir.
is it clear?
Yes, sir. It's clear.
Okay, all right. So with all these requirements for advertising and publicity, if you have any gray areas that you are not cleared with, there's an opportunity for you to approach the institute itself and ask of the registrar, the chief executive of the institute, to provide more insight into this area, okay, in case you have any area of ambiguity, any area that is not clear. The registrar, chief executive of the institute, is in the best position to provide more explanation in case you are not clear. Okay? I hope it's clear. Any other question? Are we all good? All right. There's no question. I want to be that we are all fine. All right, let's go on to the next one. Now, I remember I said something. I said that audit firm, they don't have a fixed rate. I said it. Now, in terms of the fees that they charge. Now, these are some of the bases they use when they want to, these are some of the bases they use when they want to determine what the audit fee should be. These are the things they consider when they are determining the audit fee. And I want to be that there are some of us that have worked in an audit firm, that work in audit firm, and I know that there are some of us that will still have the opportunity or the privilege to work in audit firms, okay? I have had the opportunity to work in an audit firm, okay, at some point in my life, in my career, okay? But what this does is that this information this knowledge that we are sharing here, what it does to you is that it affords you to understand the internal operations within an audit firm, okay? So to talk about this now, we want to look at what are those things they consider when they want to determine the audit fee. Now, mind you, the audit fee that audit firms charge their clients has various components. For instance, there is a bit of the audit fee that is called reimbursable expenses. What that implies is that once they incur these expenses, you cannot negotiate. You have to pay them for those ones. They call reimbursable expenses. What are those things that constitute reimbursable expenses? One, hotel accommodation. Let's say your client say that you need your service, you need to visit another state where they have businesses, okay? You need to visit there to do one or two things for them on their behalf. So that means you have to lodge in an hotel. You have to commute yourself to that place. So the transportation, the feeding, the hotel accommodation, all of those things. Sometimes you even need to print, to make some print materials. All of these constitute what we call reimbursable expenses. That one you pay. You can't negotiate because all this, the hotel accommodation, the rate. Once you have paid, you cannot now say that, okay, pay me half of that one. But it can still depend on the negotiation between the audit firm and the client anyway. But most times, we talk about the components of the audit fee are of various components. Okay, one of it is when I talk about the reimbursable expenses. Adesua, please mute your mic. Are we together? Okay, so another thing you also need to note is that the audit fee that they charge, the audit firm charge, is from this audit fee that they pay their rent. I hope you know. That's one. It's always audit fee that they pay their audit staff, their salaries. It's always audit fee that they pay bonus. I hope you know. So, and various other things that they do. All the utilities be, okay, they pay from this audit fee. Now, and I also need you to understand that if you work in an audit firm, they pay you per hour. Like they compute your rate, your wage, or your salary, whatever they are giving you on an hourly basis. So these are some of the things that you need to understand when you work in an audit firm. So when they want to determine the audit fee, these are some of the things they have at the back of their mind. These are some of the things that they consider when you talk about audit fees. And these are the things you want to look at now. One, on the determinant of the audit fee is the seniority and professional expertise of the person necessarily engaged in the work. What that implies is that you cannot compare the wealth of experience of someone that just qualified last year with someone that has qualified for over 20 years. You cannot compare the wealth of experience. So definitely the one that qualified earlier, that's for the one that qualified around 20 years ago, 15 years ago, expectantly his fee will be higher than someone that just qualified last year. So all of that is factored when computing the audit fee. Number two, determinants of audit fee. The time expended by each. The time expended by each. What that implies is that, like I said, audit firm, they pay per hour. So if you have various audit staff on the engagement team, right? The number of hours they spend on the engagement is what they will use to compute their fee at the end of the engagement. Okay, even though they don't pay them per engagement, in some audit firm they pay them monthly, and in some audit firm they pay them twice a month, depending on the modus operandi of the audit firm. Okay, so the time expended. So if the one with 20 years experience spends more time than the newly qualified general accountant, definitely is going to get more in terms of the pay than the newly qualified child accountant. That will mean by the time expended by each. Okay. The other thing also need to note is that the time that the auditor will also spend on each engagement is also a factor. Do you understand? So if the audit firm is going to spend much time, let's say supposed to finish something within one month, but he is going to spend like 2 months. Okay? So in that instance, that means they are going to spend more time. They are going to utilize more hours doing the work. And by so doing, they will pay more. I hope that is clear. Number three, the degree of risk and responsibility for which the work entails. Now, what that means is that there are risks in every engagement, and some engagements are more risky than the other. So let me give an instance. Your audit firm has been in existence for over 20 years. That means they have built what? Good reputation over the years. They have good will. Okay? And they have a good brand name. Now, a potential client now approach your client and approach your firm and says that my company has issues. In fact, they have been blacklisted by the what's it called? The Federal Inland Revenue Service. That what remains now is for them to seal up the organization for non-compliance with tax laws. And they have approached you because they gave them like another chance. That if they blew this chance, that is the end of the organization. And as they will have it, they had the opportunity of meeting somebody referred your friend to them, and one of the management staff approach your firm and says, this is the situation they are in. They're in a dilemma, and it's only you that can salvage them. It's only you that can save them from their Waterloo. Do you understand? And you know that that guy has already explained everything that has happened to the organization to you. And you know that you are putting your reputation at stake for them because it's a 50-50 chance. It's either you can help them, you can save them from the doldrums, or you will make them, you will be the one that's going to nail the final nail on the coffin. So it's a 50-50 chance. So in so doing, as an audit firm, you have to also be decisive in determining what the audit fee will be because it's a 50-50 chance. So that could be a factor in determining what the audit fee will be because you are going to try to quantify the risk and how it's going to affect your audit firm as a whole. So that degree of risk and responsibility will play a key role in determining what the audit fee should be. Okay? The next one, the priority and importance of the work to the client together with any expenses properly incurred. What that means is this. It's a simple analogy. Your client has said that I want this urgent job to be done very quickly. Normally, that engagement would have taken like a month or 2 months. But because he emphasized that he wants it to be done very quickly, that means he wants it to be done within 3 weeks, which is doable. But because it's doable, you need to pull resources from other areas to be able to achieve that deliverable. So, for instance, you have already deployed all your other staff, all the staff to other engagement. And this your client says that I am ready to handsomely, okay, for being able to deliver within the set limit, that is 3 weeks. So that is a good business for you. What do you do as an audit firm? You are going to mop up your resources from other areas to be able to do what? To be able to handle and deliver on these deliverables. So by so doing, that client will pay for premium service. That's what it means. And when they are paying for premium service, it will be at a different cost, which will translate to higher audit fee. Okay? I hope you are getting it. So that is what we mean by that. So these are the determinants of the audit fee. Does anybody have any question, comment, or observation before we continue? Are there questions, comment, or observation? Are we all good? Okay. Since somebody is talking, I will assume that everything is fine. Thank you so much. So let's continue. Now let's look at the next area. You know, I said that this chapter centers more on what is obtainable in an audit firm. Now the next thing we are going to look at is what we call tendering. Tendering. Now, tendering here is an audit terminology. That means we talk about audit firm. When you talk about tendering, it means it's a commercial process widely used by companies, especially when they wish to change their auditors. Okay? So what does that mean? It's just like your normal tender, invitation to tender that you see in other organizations or sometimes with government parastatals, where they will send they will announce, they will make announcement of what? A tender. They will say that invitation to tender. Okay? So what normally happens is this: for big organizations or multinationals, the likes of let's say the banks, some oil and gas companies, right? When they want to change their audit firm, their auditors or the audit firm, so to say, they can't just change it. They can't just change the audit firm just like that. There's a process. Okay? That means they have to notify everybody that is interested or that will be interested in coming in as their new audit firm or as their new external auditor. Okay? So they have to make it known. How do they make it known? They will publish it in a widely circulated national daily, like The Punch, Vanguard, Leadership, any of those newspapers. They will put it there so that it will be available for all and sundry. Everybody or anybody or any other firm that meets the requirement of this client or this prospective client can also submit their what tender. Tender is just saying that I am interested in taking over from the existing audit firm. That's what it means literally. Okay? But you can't say that's what it means literally, because you have to put it in the perspective that is a commercial process widely used by companies when they wish to change auditors. Okay? So that is the process. Now, how do you know what are the things you need to do if you want to tender? Now, there are certain things you need to ask yourself. It's divided into stages. The first stage is known as what? Initial consideration. This is where you do what we call self-evaluation of your audit firm. You are going to self-evaluate your audit firm because you know that for you to put in for any tender, right? For you to put in for any tender, you have to commit time and other resources to it. And sometimes you might not be able to regain or recoup that lost time. So before you start, you have to properly evaluate whether it's something you are committed to doing or not. So for you to start, you need to do what we call self-evaluation, which I call here initial consideration. As a prospective audit firm to that client, there are certain questions you need to ask yourself, whether you have to proceed with the tender or not. If you're able to answer all these questions in an affirmative manner, that is, you're able to say yes to all these questions, then that means that you can commit your resources to submitting your tender. So these are the questions you need to ask yourself as an audit firm. And you know, if you're saying that it's only you that know yourself, Socrates said that know thyself. It's only you that know you know yourself better. So you need to ask yourself, and you have to be frank with yourself. These are the questions you need to ask yourself. Does the firm have the expertise to carry out the audit? Do they have the expertise? Do they have the technical know-how? Okay, you need to ask yourself, the audit firm. Number two, you need to ask the audit firm again. Does the firm have or could it have sufficient staff available at the appropriate time? Why is this question being asked? You know, there in audit firm, there are off-peak period and there are peak period. Like now, most audit firm, this January to March is their peak period for most audit firm. That means they'll be busy. In fact, some audit firms now, their staff, they are sleeping over at their client offices because of the deliverables they need to meet on or before 31st March 2025. Those are the banks, the financial statement, the financial statement of banks needs to be filed and ready, presented on or before 31st March 2025. Fail to do so, or any bank that fails to submit within this time specified, they will be what? They will be sanctioned. That is why you see that most of the banks now, they are working day and night with the auditors to ensure that the audit report for last year ended 2024, is completed and submitted to the CBN and other regulators. So you need to ask yourself, do you have enough time in terms of, is it the peak period for you or is it the off-peak period, so that you jeopardize the interest of your client. The third question you need to ask yourself is this: are there any ethical reasons why the firm could not act? What does that mean? For instance, if the prospective client that has approached you, you finally found out that, oh, this client or this prospective client, the MD or the chairman of this organization is related to you by blood. So because of that familiarity or conflict of interest, you might not be able to proceed with that. How do you mean? Another question you need to ask yourself is this: are there any problems of which the firm is aware, which the current audit or auditor, specifically in relation to a tender, the firm should also ask itself? What that means is this: there could be a reason why the existing auditor or the existing audit firm decides to what? To leave them. And that is why they were making this tender for what? Replacement. Okay? So in the process audit firm need to ask, and that's what we call, in audit we call it making professional inquiry. Okay? Before you take over from an existing audit firm, you can't just take over without consulting with them that you are the one that wants to take over. Okay? There has to be that handshake that, oh, the outgoing audit firm or the existing audit firm is in support of your coming on board as a replacement. We call it professional inquiry. So one of the things you need to ask yourself, if you know the existing audit firm, you can send the message to them that you're interested in picking up from where they stop as the audit firm. And what are the likely problems? What are the risk areas? What are the risky things that you face as an audit firm while working with this particular client? They'll tell you. For instance, if the client delays in making their payment of the audit fee, the audit firm will tell you, the auditor will tell you and say that, oh, well, I know that you are disposition to this, that one of the reasons why we try to discontinue our service with them is that they delay in making our payment. The audit fee, they don't pay it on time. So the audit firm will ask you, if you are comfortable with that, you can take it off. But if you know you cannot withstand that, then that means it's a thing that you need to ponder about before you continue. Okay. The other thing you also need to ask yourself is this: why is it being asked to tender? Why do you want to tender? What are you trying to achieve when you do what? When you want to tender? Okay. Now, what that means is this: sometimes it might be a prospective client that over the years that you are working as an audit firm for 5 years, the highest amount you have received as an audit fee is 5 million naira. But this particular prospective client, you have done your background check and see that they can pay as high as 20 million naira. What that means is that your revenue base is going to do what? It's going to increase. So that could be one of the bases why you want to what? Why you want to submit your tender. Another thing is that, could it or should it offer to do the audit for a lower fee than other firms are likely to quote? So sometimes we are still going to look at that in the course of this class. Sometimes there might be need for you to be able to evaluate other prospective audit firms that want to submit their tender. For instance, you saw an invitation to tender in the National Daily, where you know the client says, the tender says that is an oil and gas company that they want to replace their auditor, that if you meet also as requirements, please submit your tender. Definitely, you know that the Big Four, all of them will have interest in this kind of client of a client. And you are just a small medium audit firm. You are just Ade and Co. child accountant. You know that it will be very difficult for the prospective client to select your audit firm at the expense of the Big Four. So you have to be intentional about it. So what can you do? You know that what you're trying to do now, you are trying to beat the Big Four to winning that tender. So you know that the Big Four, their charges will be above 20 million. But you say that because you want to be considered, you want to be able to compete, or you want a situation whereby you have some form of leverage over the tendering process. you know that let me charge lesser than what the other firm has charged. The other firm are charging 20 million naira each. You know that let me charge 7 million. 7 million naira is higher than what your average audit fee is. Okay? Because your average audit fee is 5 million, this one is 7 million. So what you know what you are trying to do. So you say, okay, let me beat the big four to this. You now decide to quote 7 million. Okay? Because sometimes one of the key consideration that the prospective clients always consider is the price, is the fee. The first thing they consider is the fee before any other thing. Okay, so that might give you an edge over the big four. And what you also need to ask yourself is this: are there any reason why this audit is particularly attractive to the firm? Okay, are there any reasons why this audit is particularly attractive to the firm? For instance, it might be a new sector that you're trying to break in. Maybe most of your clients are the banking sector, but this one is an oil and gas sector. So and you know that this is a different sector. So this could be an attractive, one of the main reasons why you want to submit your tender. Another thing you need to also ask yourself, what audit risk might arise with this particular tender? That is, are you sure that you are making the right decision to submit your tender? What that implies is this. What that implies is this. You know, in every engagement, there is a risk. There's a risk that you might not be able to work closely and harmoniously with the management of the organization. Okay? There could be a risk. It's a risk. So these are some of the things you need to consider. And if it's a risk, like you know in your CSME, you cannot eliminate all the risk. What you can do is to do what? Is to mitigate the risk. Once you can mitigate the risk, you are good to go. So if for this question that is being asked here under this initial consideration appears to be what, or turn out to be yes or affirmative, right? That means that you can continue with what? With the tendering process. Do you understand? That means you can continue with what? With the tendering process. Okay? Now, one of the things you need to know is if you are sure that you want to proceed with your tendering process, then what that means is that there are certain things that you will need to what? To put in place. Okay? There are certain things you need to do what? You need to put in place. First thing is that you must have a mindset that you are going to succeed in this engagement. Okay? In this tendering process. You have to be confident you are going to succeed. Okay? You'll be able to do better. The other thing you also need to note is that you should ensure that you lower your audit fee. You have to develop a audit strategy such that you are going to lower your audit fee. That's for you to win that tender at the expense of other prospective audit firms. Okay? So that is another thing you need to do. Then, after you have done all of this, once you have made up your mind that you are going to continue with the tender, the next thing you are going to do now is to carry out what we call a preliminary audit risk assessment. A preliminary audit risk assessment. Why do we call it a preliminary audit risk assessment? It is so called because the assessment will afford you the opportunity to have an insight into what the business is all about. You give the audit firm an insight into what the business, what the prospective client business is on and what do they do. Because you cannot audit what you don't know. So you'll be given that, it will give you that privilege to conduct what we call a preliminary audit risk assessment. And what do you stand to learn, or what do you stand to gain from this? You need to know the key risk area of the business. You need to know what the key risk area of the business. Number two, you'll be able to know the audit strategy that you are going to what deploy towards the what towards this engagement. Okay. Then also, it will also give you the opportunity to knowing if there are other information that you need to have obtained before you dive into that particular engagement. Okay. So you give you opportunity to know what the business into, what are they into. You need to look at the composition of the board and those type of governance, the board and the executive management. You look at them, whether they are people that you can work with, whether they are people that have good track record. All of these are what you are going to do during the preliminary audit risk requirement. And more importantly, if you carry out the audit risk requirement, it will afford you to estimate how many audit staff will be required for that audit. Because it's going to be very, very disappointing. After you have deployed your plan, let's say you have finally succeeded, you have selected you as the audit firm, and you know that you should have deployed like 20 to that or 15 to that kind of engagement, where you deployed only 6. Only for you to get to the field, you know that there's a shortage of manpower. One of the ways you can get a shortage of manpower is when you do this one I'm talking about, when you carry out a preliminary audit risk assessment. Okay, that is what you need to do. Then, once you are done with the preliminary audit risk assessment, you go to the next stage. You are going to prepare a document, okay, a submission document for the potential client. And in that submission document, it contains the following: an outline of the key characteristics of the firm, an outline of the key characteristics of the firm. Now, that submission document, you can also call it the more like a proposal, okay? The audit firm proposal, or which also include the brochure of the audit firm. You know, the brochure, if you have a brochure document, it's a document that outlines the key characteristics of the audit firm. Who are the people, who are the promoters of this business? Who are the managing key partners in this audit firm? Okay. Then also afford you clarification of the nature of the audit work, other non-audit work to be performed. So it will afford you opportunity to advertise other services you can render to the prospective clients. For instance, you can say that aside from helping them with their year-end audit report, right? You can also perform tax advisory services. And what you also need to put in that your submission document is a statement of the requirements of the client and how the firm will comply with them. That you have to give them the assurance that you are going to cooperate with them. That statement must be emphatic in this submission document. And there will also be great in this submission document is an outline of how the work will be performed, the strategy you are going to deploy. And the only way you can do this is if you have done what we call a preliminary audit risk assessment. If you have not done a preliminary audit risk assessment, it will be very difficult for you to determine the strategy to be performed. And also, it will also afford you to be able to determine the proposed audit fee and how you arrive at it. That is the proposed audit fee and its computation. Okay? Then also, it will also, after all of this has been put together, right? There will be a need for you to do a physical presentation of your submission document before the client. Okay? What that implies is that after you have submitted your tender and the tender date has lapsed, the next for them to do is to get back to you to do what? To make a presentation. All right? Because sometimes some people are good in compiling documents. But when it comes to public speaking, they can be very timid. Okay? So that's the reason why sometimes there will be need for you to do what we call a physical presentation, or to give a presentation to the prospective client. So after you have done your presentation, right, the client will now do the following. They will do what? They will evaluate the tender. When they evaluate the tender, the first thing that they will look at is what? The fee. How much has each of these audit firms, how much have they charged? Number two, the services that the firm is able to provide. What other services? What other attractions do you have as an audit firm? That's what that means. Number three, geographical location and coverage of the firm's offices. So they want to prefer an audit firm that has wide geographical spread. Like the Big Four now, they are scattered all over the country, all over the world. But Ade and Co, that accountants, may only be located in Lagos. You don't have another firm in other parts of the country where the client has what? Business or business interest. Another thing they also look at is the expertise of the firm and its staff. They look at the trajectory of the people that make up the audit firm. Okay? And the other thing we also consider is the reputation of the firm. How reputable is the audit firm? Has the audit firm been involved with any slander or operational negligence or libel, any of those things? Okay? The other thing you also need to consider is whether the senior management of the company think that they will be able to work well or to cooperate with the audit firm. Well, that is very key. There must be that good cooperation between the client, possessive client management and the audit firm. All right? Then, the extent to which the audit firm wants to change its audit firm and its association from the current auditor. So another thing also look at is this. They will compare apple for apple. The outgoing audit firm, what do they have? What don't they have? What they have and what they don't have, both of them they will consider it vis-a-vis the prospective audit firm. What is going to bring on board and what are the likely replacements for the other ones. So those are the things that they are going to consider. After which they are going to do what? They're going to select the best amongst those audit firms that have tendered their what? They have made their tender known to the prospective client. Does anybody have any question before we proceed? Are we clear? Are there questions, comments? Are there questions, comments, observation?
No.
Okay, that means you are good, right? All right, so let's continue. So we go to the next one, which is called what? Low balling. I've taken a little time to explain low balling, but I did not mention the terminology. I only explained it in the course of the class. What do you mean by low balling? Low balling, sorry. Low balling is the practice of tendering for an audit work at a very low fee with the objective of winning the audit. What does it mean? What this means is that this is an intentional act or intentional act by audit firms globally, not only in Nigeria, globally, whereby they intentionally reduce the audit fee with all the intention of what? Winning the audit. We call it what? Low balling. Let me give a classical example. So in condition to the example I started with, that you are a small, medium audit firm, Ade and Co, child accountant, and you have the Big Four also submitting their tender. And I said that those ones they charge 20 million, but you are charging 7 million. Okay? Now, what that implies is this. When we look at when the client is evaluating the tender, the first thing that comes to their mind is what is the audit fee. So they look at the tender and saw that you are charging 7 million. Why the Big Four they are charging 20 million? After moving the Big Four, they say that what are we going to? Is there anything different from what they are going to get if they decide to go with your audit firm, and they reach a compromise that they will go for your audit firm, since they know that your audit firm is also an audit firm of what, of repute. So you were considered, you got the engagement. Now, because you have advertised other services that you can render to them, okay, they now approach you again that yes, the first work you have, the first assignment or the first engagement that we have given you, you have delivered on it. We are happy. Now, what we want to do is this. We want to engage you as our tax auditor as well. And he presents everything. And they now ask the guy to present what will be his audit fee. Remember that before now, he also wanted to charge 20 million naira for the, what's it called? For the engagement also. But because he looked at himself, or he evaluated himself that if he does that, he will lose from all angles. That's why he decided to intentionally reduce the audit fee. So what now happened is that this is an opportunity for him to do what? To take advantage of the what? Of the firm, of the client. So when they approach him that would he be open to being their tax auditor, automatically the firm said yes. They now asked him, how much do you want to charge? At that point, the auditor realized that our charge will be what? 30 million naira. So that money that they thought that they have lost before, they have been able to what? Recoup it. That's why I say that it's an intentional practice whereby the audit firm will reduce their what? The audit fee with the intention of what? Winning the audit. Because they know that it will not be able to raise the audit fee in future years. That is one of the reasons. Once you have an audit firm today now, their charge is 10 million naira this year. Next year, you cannot say your charge will be 20 million naira. You might, if year is not taken, you might pay that 10 million naira for the next 3 years. That's why they always consider this low balling. Another reason is it will be able to recover losses of audit fee by providing other or more lucrative non-audit services. That's why I use the example of what? The tax auditor. All right? That's why I use the example of what? The tax auditor. That's why I use that example. All right? What you also need to know, like I said, this is what is obtainable across the globe. Anywhere you have audit firms, these things are being practicalized. It's not peculiar to Nigeria. And there's nowhere where it has been confirmed that by practicing lowballing, it has affected the quality of the service delivery of the audit firm. It has not been substantiated. It has not been confirmed that such can happen. Okay, so that is that about lowballing. Any question? Any question? Any comment? Any observation? So let's continue. Now, the next one to look at is what we call precondition. Okay? Precondition. Now, let me explain what we mean by this. This is a fallout, okay, from this. Agreeing the terms of engagement, ISA 210, the objective of the audit engagement letter. What they talk about precondition is this. You know that if you want to become an external auditor of any client, you have to present what is called an engagement letter. That is the letter that empowers you as their auditor. Okay. Now, before this letter is signed, there are certain things that needs to be agreed That's why we call it pre. That's why we call it what? Precondition. There are certain things that what that need to be what clarified between the client and the audit firm. Once this is resolved, then they will now go to sign what the engagement letter. So these are the things that they need to do as we are talking about. Let me give you an instance. Remember when Ronaldo moved from his club, Real Madrid, to that club in Saudi Arabia. You know that we only saw him moved. We saw him when he was signing the contract that he has moved from Real Madrid to what? To what's it called? To that club in Saudi Arabia. Okay? But before he signed that document, that contract, there have been some background discussion. For instance, let me give you an instance so that you understand what I'm saying. See, what I want to understand is this. When you're talking about audit, I want to understand that audit is something that you can always relate with. Do you know that C. Ronaldo, one of the conditions that C. Ronaldo gave that Saudi club is that, in Saudi Arabia, you are not allowed to live with a woman if you are not married to that woman. Do you know what? They waived this for C. Ronaldo because himself and his partner, that lady, they have not been married. They are just living lovers, which is an abomination, or it's not allowed, it's not permissible in Saudi Arabia. But because they wanted him badly to come and join them, these are some of the conditions they had and they consented to. And those are some of the things that made him to move with his wife and with his partner to Saudi Arabia. And nobody can prosecute them. All right? So the same thing that we are talking about here. So before the auditor signs the letter of engagement with the client, they must have some heart-to-heart discussion. And that's what we want to look at. Those are the things we call the preconditions. One,
So they have that much money to splurge. That's interesting.
hello? Abimbola, are you with us?
So sorry,
Okay,
sir.
let's continue. Okay. So as I was saying, these are some of the things that they need to clarify before they sign up the letter of engagement. Number one, they must establish whether the preconditions for an audit are present. They must establish that we have these preconditions. Number two, they must confirm that there is a common understanding between the auditor and the management. That is, that just as I explained, there will be some things that they need to agree with the auditor and the management. Okay? Now, to establish if the precondition of an audit are present, the auditor is required to do what? One, establishing the financial reporting framework to be used in the preparation of the financial statement are acceptable. So before the auditor goes on to present the letter of engagement to the client to sign, he must ensure that that financial statement that is going to review or examine, they have been prepared in line with IFRS. Otherwise, the letter of engagement will not be needed. Number two, the auditor also needs to obtain an agreement of management that it acknowledges and understands its responsibility as what? As the management or as the client. There are certain things that they need to do. Number one, that the client will be the one responsible for preparation of the financial statement. That's number one. It's not the auditor or the audit firm that will prepare financial statement. The client will be responsible for the preparation of the financial statement. Okay? Number two, the client will also be responsible for putting in place a sound internal control system. The client will be responsible for putting in place what? A sound internal control system. Number three, the client should also will be responsible to provide the auditor with all relevant and requested information and unrestricted access to all personnel. So any information that the audit firm or the auditor asks from the client, they must be willing to what? To provide. If they are not consented to these conditions, these preconditions, then the auditor will not proceed to presenting the letter of engagement. So the auditor is required to refuse the engagement where there's a limitation of scope imposed by management, such that the auditor would be unable to express an opinion on the financial statement. For instance, they didn't give the auditor the free will. The auditor is not independent. Okay? Number two, the financial reporting framework to be used in preparation of financial statement is unacceptable. The acceptable financial reporting framework in Nigeria during the preparation of financial statement is IFRS, National Financial Reporting Standard. Okay? Then another thing, when management do not agree to the above responsibilities, the only exception allowed by ISA 210 for accepting or continuing the engagement of the above is when a law or regulation requires the auditor to do so. So what that implies is this. The auditor must ensure that all of these conditions are fulfilled. Where those conditions are not fulfilled, the auditor should not continue or should not proceed to what? Presenting the letter of what? Engagement. All right? I hope that is clear. So that takes us to the next one now. This is a rider or a continuation to the one that we just explained. Agree the terms of audit engagement, ISA 210, the objective of what? The letter of engagement. That is, what are the purposes of the letter of engagement? What are the purposes of the engagement letter? Number one, that letter establish whether the preconditions for an audit are present. That's one of the objectives. Number two, it confirms that there is a common understanding between the auditor and the management. Okay? Number three, it establishes if the preconditions of an audit are present. It establishes if the preconditions of the audit are present. So it requires the auditor to establish. So it requires the auditor to do what? To ascertain whether the financial reporting framework used in preparation of financial statement is what? Is acceptable. Okay? That is, you need to establish that the financial reporting framework, however that they have used to prepare financial statement is in what? Is in order. Also, he needs to obtain an agreement of management that he acknowledges and understands his responsibility, that his management understand the following responsibilities that they need to carry out. Number one, they will be responsible for the preparation of financial statements. They will be responsible for putting in place a standard control system. They were responsible for furnishing the auditor with any documentation without any restriction or reservation. Okay? The auditor is also required to refuse the engagement where there's limitation of what? Scope. All right? So all of these are what they need to what? They need to comply with. All right? Any question before we proceed? Is there any question before we proceed? If there are no questions, we proceed. The next one, the content of the engagement letter. What are those things that you have in letter of engagement? Either you call it engagement letter or you call it letter of engagement. You are saying the same thing. I hope you know. So the engagement letter must include the following. Number one, the objective and scope of the audit. Why do you want to embark on that audit? That is the objective. And what areas, what aspect of the business are you considering? That is the scope. It also discusses or contains the responsibilities of the auditor. It contains what? The responsibilities of the auditor. What do you think are the responsibilities of the auditor? The main responsibility of the auditor is to ensure that the financial statements are prepared in line with applicable financial regulatory framework. That is the main responsibility of the auditor. All right. Then we also talk about the responsibilities of the management. What are the responsibilities of the management? To prepare the financial statement, to put in place an internal control system, to be responsible for the prevention and detection of fraud. All right. Then the next thing that will also be contained in letter of engagement is the identification of the underlying financial reporting framework. That is, the auditor has accepted that they have prepared financial statements in line with applicable financial regulatory framework. And lastly, there should be reference to the expected form and content of any report to be issued. There should be reference to the expected form and content of any report to be issued. What that implies is that there must be an acceptable format that which the audit report will be presented. Will it be given to them in hard copy and also in soft copy, or will it be given to them only in soft copy, or will it be given to them only in other formats? Okay, that is what that explains. So with that, we are done with the content of the letter of engagement. Any question, any comment, any observation? Are we good to go?
Yes, sir, we are good to go.
All right, so let's continue. So the next thing we want to look at now is these other small areas, unpaid fees. Unpaid fees. Now, like I earlier explained, when the new auditor is coming on board, I said that there is a need for the new auditor to discuss with the outgoing auditor or the existing auditor to know what is obtainable, right? I said so. Now, it's something that we are going to look at now. So before the new auditor accept the audit, accept the engagement, he must ensure that the outgoing auditor has been fully settled. You must ensure that the outgoing auditor has been fully settled. You need to ensure that the outgoing auditor has been fully settled before before he takes up the engagement. If that has not been done, the new audit firm will not take up the engagement. That's what we mean by that. Okay. Then another thing we also need to look at is confidentiality. Confidentiality. Now, one of the attributes or one of the financial principles of an auditor or a chartered accountant is that the ability to do what? To keep information. You must not be able to provide information recklessly. You must not furnish information recklessly. So somebody that confide in you with information, you're able to keep that information and not leak the information. Okay? So what that means is that the auditor should not be the auditor should ensure that whatever information that has been presented to him in confidence, he does not divulge it. He should not divulge it. So what that means is that the auditor at all times should always keep information at his disposal or presented to him. The only time he can disclose that information is where it is required to do so. Is when the what is required to do so. So what happens is that sometimes the outgoing auditor too can also provide certain information, secret information about the client to the auditor, to the new audit firm that is coming on board. Why would he do so? You need to do so that you also be able to know what are the do's and don'ts, what are the things he needs not to do, so as not to step on the toes of the what of the new client. So all those information, the outgoing auditor can share it with the new audit firm, provided they are not doing it to do what? To make the client to what? Not to be able to do the work, what they're supposed to do. Okay? That is what it means. So any information that is furnished by the outgoing auditor to the new auditor, they are information that will not warrant or will not bring about any issue with the. So that is clear, right? So let's continue. Now, the next one we want to look at is what? Defamation. It's an extension of that confidentiality. What this means is this: the new auditor and the old auditor can discuss whatever the level of their discussion, provided that information that is shared between them, okay, does not in any way bring about prejudice or lead to contempt of law. What that means is that they are not damaging the image of the client. They are not trying to destroy the reputation of the client. They are not trying to make false allegations about the client. If all they are saying is true, for instance, if where they don't make payment, where they don't make payment on time, where they don't pay the audit fee on time, that is a fact. It's not an allegation. So you can say that with to your new incoming or new audit firm that this is what is obtainable. Okay, and that will not be taken against you, because in that way you have not acted out of what? Out of scope. Okay, and sometimes there might be some hints from your client that says, oh, you have to be watchful about the kind of transactions that this your new client they are into. So all of this, they cannot bring it against you. And when you are an audit firm, you detected that your client are into some shady businesses, even though that information was found to be what? To be false, right? The client cannot make a case about it. They cannot take you to court that you are trying to what? You're trying to defame, you are trying to defame them, because you are acting under what we call a protected, you are protected under what we call a qualified privilege. Because if you have not been the auditor, it would have been difficult for you to know this information or to have this information. So they are not going to take it up with you as an audit firm saying that let's go and prosecute this audit firm for giving false information about us. That is what it means. So the defamation is saying here that any information shared with you, always ensure that they are what? They are truthful, or they are the truth, or is the truth. And where it is not true, or where it's found out not to be true, they can't even take it up against you. Okay? They will not take it up against you, provided what you are saying, you are not trying to defame them or trying to bring them to what? To disrepute. All right? Another thing you also need to note is that audit firms, there's what they call joint auditor. What is joint auditor? That is when more than one audit firm is engaged to carry out an engagement. When more than one audit firm is engaged to carry out an engagement. For instance, we want to audit a bank now. Most importantly, you know that auditing a bank cannot be done by one audit firm. So you have more than one audit firm. What we are saying is this: where some of the reasons why you have joint auditor is the fact that there's a new audit firm that is coming on board. There's a new audit firm that is coming on board. And the outgoing auditor needs to show the new audit firm some way or how it goes about the work. So both of them will be engaged for the first year. Okay, both of them will be engaged for in the first year. What that means is, if at the end of the day they now decide to let go of the old or outgoing audit firm and stay with the new audit firm, a communication should be made to the what? To the outgoing auditor that we are not continuing with you any longer. We are decided to continue with the new audit firm that has taken over. That communication must be made by the what? By the client, okay? The client must make that communication to the what? To the outgoing auditor, so that he will be aware that the following year he will not be involved, or they will not be jointly engaged for subsequent engagement. That is what we are talking about. All right. I hope we are all clear with this. Any question, comment, observation? We are good to go, right? Okay, let's continue. The next one we want to look at is what we call vacancy. 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 Why do we have this? Now, in the course of performing an engagement as an audit firm, there are times where the partner or one of the partners of the audit firm will suddenly becomes incapacitated. Okay, becomes what? Incapacitated. He can no longer perform. And you know that audit firm, all of them, they are partnership businesses. So if one partner dies, it could lead to the end of the audit firm, right? What this implies is, where there is this situation where one of the partner dies, okay, and another audit firm has been, that other partner cannot continue. So he has now invited another audit firm to come and continue, okay, to come and do what? To continue as a partner. For instance, maybe the other partner, maybe that one that died, or the one that became incapacitated is the only child accountant. The other ones is just an co. It's just a staff or a senior colleague. Okay. So before such person can take over in this kind of a scenario where there is a death or a vacancy, so to say, the incoming auditor should endeavor to obtain information such as the person that appointed him or her as the new practitioner has the mandate. So he needs to request for what? The letter of administration that the court has empowered that person to do what? To nominate that person as a what? As the next practitioner for that particular client. Because as a client, the client will continue, is a going concern. So he needs to be sure that the audit firm that their leader or their managing partner died will not bring the end to the new client business. So they need to nominate another auditor that will continue carry on with the engagement. So when the new audit firm is coming on board, you need to request for information that nominate or that empowers that other one to do what? Be able to nominate that other person as what? As the replacement for the incapacitated partner. All that is clear. So we proceed. The next one we want to look at is what we call transfer of books and papers. This is what it means. Now, the audit working paper belongs to who? Belongs to the audit firm. Okay? Belongs to who? The audit firm. So what that implies is that the client, right, cannot, to withhold any of the audit working papers. That's what I'm saying now. So what we are saying is this, that as an audit firm, you cannot hold on to the papers or books, let's say financial statement of the client. So you have a client that has not paid the audit fee for 3 years or 2 years. And after that, you will not release their financial statement and the audit reports to them. So what that implies is that that is not supposed to be, because it's said here that the court has ruled that you cannot hold on to your client's books or documents because they have not made your payment. You have to follow other sources or other alternative ways to resolving and ensuring that you receive your outstanding payment. That's what we are saying. So for instance, you have a client, AB Limited, and you are the auditor, Ade and Co. AB Limited has not paid the audit fee for a year or two, and you have the audited report. That's that I'm not going to give them the audited report. What is said in this law is that there's no way the court has ruled that you cannot hold on to your client's books of record. You cannot use that one as a lien. Lien means a collateral. Until when they made payment to your audit fee, when you release this document to them, the court has said that shouldn't be. You must use other means to getting your money or your audit fee. All right. Then the next thing you also need to look at is what we call the additional work. Now, let's say in the course of carrying out the engagement, they have engaged you to be their external auditor. And along the way, they now saw a need to carry out some additional activity. Okay? And in a way, they are now saying that you should be the one that should be responsible for that. What that implies is this: once you have accepted to take up the new activity or additional activity, you must also obtain a separate document, okay, to show that they have given you that activity or another work to do. Or sometimes it could be the fact that they gave it to another firm to do the work. So that new firm that has been assigned to do the work must also be presented with a letter saying that they have been given the opportunity, okay, to do what? To carry on with other activities aside from that one. Let me give an instance. You are the external auditor of your client, and that's that they want to do inventory valuation, and they don't consult you, and they don't want to engage your audit firm. You now engage another audit firm to carry out the inventory valuation. So that new audit firm that is taking up the inventory valuation will be giving another letter. Okay? Will be giving what? Another letter. Or perchance, you're also the same audit firm that will be giving that opportunity to carry out other audit activity, other functions. You also be giving what? A letter saying that this is an extension of the work that you're already doing. It is not part of what you have already been committed to. Rather, it's just an addition to that one. That's what we are saying. Okay? That is what we are saying. So both the existing audit firm that is doing the work and the new one that has been engaged to carry out some other activities, both of them must be aware. There must be that communication to them that, oh, we are the one that assigned certain responsibilities with this other audit firm. That should be what? Communicated. I hope that is clear. So with that, we are done with the first aspect of what is obtainable in an audit firm. All what I have been discussing so far are what is obtainable in an audit firm. Any question, any comment, any observation? Are we good to go? If we are good to go, let's continue. So the next aspect we are looking at now is the aspect that I said has to do with the Companies and Allied Matters Act 2020 as amended and its impact on the practice of audit and assurance services. Okay, so we are going to look at some sections of CAMA 2020 as amended as it affects the practice of audit and assurance services. Number one is appointment of an auditor, section 401, subsection 1 of CAMA 2020 as amended. What does this say? The law establishes that every company shall, at each annual general meeting, appoint an auditor or auditors to audit financial statements of the company and to hold office from the conclusion of that on the conclusion of the next annual general meeting. What are we saying? Now, let me explain something to us. In appointing an auditor, I'm talking about external auditor here. There are two sets of people that can appoint external auditor. Number one, the first external auditor will always be appointed by the board of directors. I take it again. The first set of external auditors will always be appointed by the what? By the board of directors. And that auditor will hold office from that time to the conclusion of the next annual general meeting. Other subsequent appointments are ratified by the shareholders. Other subsequent appointments are ratified by who? By the shareholders. Okay? So once the board of directors have appointed the auditor, who will ratify? Ratification means that the shareholders will approve that that person becomes the what? The substantive external auditor of the company. And that is done by a special resolution, which is more like a two-thirds of the majority of the shareholder we accept that the auditor can what? And continue. I hope we understand. That is what we mean by that. Then another thing you also need to note is this. The directors also, they have the power to fill casual vacancy in case an audit firm or auditor becomes incapacitated. The director can fill the casual vacancy for that audit firm that becomes incapacitated to continue for where that audit firm stops to the next annual general meeting. Okay? The only reason why such auditor or the auditors will not be reappointed are one. That means there are times when the auditor will not be reappointed. One, if he's not qualified for reappointment. There are times that he might not be qualified for it. Maybe he has bought shares in the organization, so he has become co-owner or co-owner of the organization, so he will not be allowed. Okay, that is one of the reasons. Number two, they have passed a resolution, okay, that the person should not be reappointed. Number three, he has indicated his willingness not to continue in office. There's a typo here, okay? Not to do what? Not to continue in office. Number four, The auditor and other chartered accountants. Okay, it's still part of that one. That is, yeah, it's number 3. He has indicated his willingness not to continue in office. Okay, and auditors and other chartered accountants where possible. That is the conclusion. What that means is that the auditor is deemed not to be appointed where is not qualified to act, or where the result has been passed, not to be reappointed, or he has indicated his willingness not to continue in office in writing. Okay, these are the reasons why he will not be appointed. Otherwise, at every annual general meeting, the auditor is usually what? Reappointed. I hope that is clear. Do you have any question, comment, observation before we continue? Are we good to go? All right. So let's continue. Duties and powers of an auditor. That's another aspect of CAMA. Section 407. What this says is that we are looking at the duties and responsibilities of an auditor. So one thing you need to note is this, and this is one of the areas where students fail audit and assurance. When you talk about duties of an auditor, duties of an auditor are divided into primary and what? Secondary. If, for instance, they give you an exam and they say that, what are the duties of an auditor? And you started with the secondary duties of an auditor, it's going to affect the marks that you'll be awarded. It is going to do what? Affect the marks that you'll be what? You'll be awarded. So at all times, you must ensure that you always list and explain the primary duties of an auditor when you talk about the secondary duties. Those are the primary duties of an auditor. Number 1 primary duty of an auditor is to ensure that the financial statements have been prepared in line with applicable financial regulatory framework. The financial statements have been prepared in line with applicable financial regulatory framework. Number 2, another primary duty is that proper accounting records have been kept by the company. Proper accounting records have been kept by the company. That's another primary duty of the auditor. Number 3, primary duty. Proper returns adequate for their audit have been what? Have been received from branches not visited by them. There are times when the auditor will be so busy that he cannot visit all the branches. For instance, want to audit the Union Bank of Nigeria. Okay, they have over 350 branches of 350 branches. I think that the audit firm will go around all these branches. The answer is no. What will you do? You will obtain a report from branches not visited by them. The other primary duty is to ensure that the company's balance sheet and profit and loss are in agreement with the accounting record. That is, the source document and the financial statement and the what are in agreement. So when you pick the source document, for instance, you look at the invoice, then you trace an invoice to an account schedule. You know, from account schedule, you see financial statement. So by the time you look at the relationship, or you trace this transaction, you need to ensure that that transaction does exist in the books. Okay? So, other secondary duties of an auditor is to prepare the audit report to the company shareholders. Prepare audit report to the company shareholder. Number 2, to qualify the audit report where applicable. To qualify the audit report where applicable. We are going to look at that in subsequent chapters, okay? The number 3, ensuring its acquittance with the articles and other statutes of the company so that the audit will be in due compliance. Okay? Then next, the auditor will also have the power to what? To investigate and request for supply of information omitted from the company financial statement supplied to the auditor. for the audit of the company. So where is reviewing the financial statement, where you see the need to obtain certain information, you can ask the client to provide that information. So the auditor has the following. When you are looking at powers and you're looking at duties and powers of the auditor, let's look at the power. Number one, that means you're looking at what the auditor can, the right. When you talk about power, you're talking about the right of an auditor. The auditor has the right of access at all times to the company books, records, and what vouchers. So the company's book, record, and vouchers can be reviewed by the what and by the auditor at any time. He also has the right to information and explanation necessary for the audit of the companies from the company's officials. So he has the right to what? Ask information or explanation, which he considered very important from the officers of the company, like the CFO, the MD, the ED, and the likes. Okay? Are we together? Does anybody have any question? Does anybody have any question? Comment, observation? Are we good to go? Okay, let's continue. The next one. Any question?
Yes, we are good to go.
All right, thank you.
No, sir.
I know, okay, I know the
Continue.
time is fast spent, but you understand we need to ensure we do justice to it, okay? You say no gain without pay, right? That's one of the sacrifices you have to make, okay? For you to move to the next level, okay? So let's continue. Remuneration of an auditor, section 408. What it says is that whoever appoints the auditor, we know that's going to determine what the audit fee will be. Remuneration means who pays the auditor. They're saying that whoever calls the piper, they takes the tune, right? So in this instance now, that does not hold water. Why do I say so? Where the board of directors appoints the external auditor, they will be the one that will determine the audit fee. But where the shareholders are the ones that appoints the auditor, they cannot determine what is audit fee be. Rather, they are going to allow the directors to preside on what should be the audit fee. Rather, they will allow the directors to preside or to decide what will be the what audit fee. Why is that so? It is so because the shareholders, they don't have the good understanding of the industry. Okay, they don't know what is obtainable in the industry. So that's why they will leave it to the what, to the board of directors to assist in that regard. All right, that's what I need to explain. The next one is removal of an auditor. Now, when you talk about removal of an auditor, what are we saying? What are we trying to say? Now, when somebody is removed from office, you know, in Lagos State, this week, the Lagos State Speaker has been removed and has been replaced with another person, the Deputy Speaker, Mrs. Miranda, right? So what that means is that when somebody is removed, that means the person did not complete his tenure. Okay? And you saw, if you are following the news or the report, they had a vote at the Lagos State House of Assembly where out of 40, 32 voted for a replacement or for the removal of the speaker. That is Obasa, right? So that's what we are saying here. So when the auditor is removed, there will also be reasons for the removal of an auditor. So the company may, with other resolution, remove an auditor. Okay? They might not wait till the expiration of his tenure to remove the auditor. So by ordinary resolution, they can remove the auditor. They will just call for what? An extraordinary general meeting. An extraordinary general meeting where they will decide Two-thirds majority will decide. And within 14 days, they have to notify the Corporate Affairs Commission that they have changed the auditor. Why do you think they need to notify the Corporate Affairs Commission? This is so because should there be any issue in the future and official communication, that auditor has already been communicated to CAC that he has been what? He has been removed. So you cannot lay claim to that auditor or the audit firm that is responsible for whatever misfortune that the client company later faces after his removal. Okay, that is what we mean by that. So after his removal, the removed auditor can also request, he has the power to do what? He has the power to requisition a meeting. Requisition a meeting here means that he wants to know why he has been removed. And sometimes you need to defend whatever position leveled against him. Okay, you need to justify or explain the reasons behind his actions. Okay, that is what we mean by that. Then they have what we call resignation of an auditor. Resignation of an auditor is different from removal of an auditor. Okay, when an auditor resigns from an office, it means that he's doing so at his own what? At his own volition. He's doing so what? At his own what? At his own volition. So by resigning, he will tender his resignation letter and include what we call a statement of what? Circumstance. That means his resignation letter must be accompanied by what? A statement of circumstance or not. And this is what distinguishes resignation of an auditor from removal of an auditor. What do you mean by a statement of circumstance? A statement of circumstance entails the reasons why the auditor chooses to what? To resign his engagement or appointment. The reasons behind his what? Resignation. That could be as a result of maybe he has lost confidence in the integrity of the managers or the management, or maybe there is disagreement between the auditor and the management. Okay, these are some of the reasons. Okay, it could be as a result of the fact that the management, they are frustrating his effort. All right, so all of this could be the reasons why he wants to resign, and sometimes he might not have any reason. Sometimes just because of the fact that maybe he doesn't wish to continue as an auditor. Okay, so what happens now is that the client must submit this resignation letter and statement of circumstance at the client registered office. He must go to the client registered office to submit this letter. Once they're able to receive this letter from him, then the company will notify CAC that the auditor has resigned. And the reason is just the same as the resignation. That is, should there be any issue, they will be able to trace it to the fact that it was the auditor that led to the resignation of the auditor that led to all of this. Okay, that is what we mean by that. The next one we are going to look at now is right to requisition a meeting, section 366. Right to requisition meeting, section 336. Now, where does this happen? Now, when the auditor has resigned and he has a statement of circumstance, that is the reasons why he wants to resign. So at this junction, right, there will be a need for him once he states the reason for his resignation, right, the the management, sometimes we want to do what? Because so, let's for instance, they say that he has lost confidence in the integrity of the management. He has lost confidence in the integrity of the what of the management. So what will he do? So now what is what he's saying? Now say that the management staff A, B, C, D, E, Mr. A, Mr. B, Mrs. B, Mrs. A, and Mr. A, all these people, they have contributed in making my life what miserable. So with that, before they accept the letter of resignation, they will call for a meeting. They will call for what? A meeting where all the named management staff will be what? Will be invited together with the auditor to come and do what? To come and resolve their issues. If they're able to resolve their issue, he might withdraw his what? Letter of resignation. And where he's not able to resolve the issue, they will accept the letter of resignation and the engagement is over. Okay? The engagement is what? Is over. So that is what we mean by that. Any question, any comment, any observation? Any question, any comment, any observation? If there are no comments, question or observation, we need to look at some questions, okay, or one particular question that addresses this that we are talking about, okay? So, because I know that some of us, we understood or we understand this particular paper, but where we have issues is how do we answer questions in exams, okay? So, and that's one of the reasons why we are here to do what? To help. So I'm trying to look for a question now that contains that we have talked about. Okay? Just give me like a few minutes. Let me just scan through and see if there are questions that relates to anything that we have talked about. But in the meantime, does anybody have any question, or are we cleared with what we have talked about? Just give me some minutes. I'm trying to see that particular question, okay, that relates to that particular one. Just a minute. Trying to see if there is any question on this. That's what I'm trying to check. Sorry. Just give me 1 minute. Some minutes more. Okay. Trying to look for questions. Let's see. Mhm. Okay, so I think I've seen one question. Let's look at it. Let me share it with us. Let me share with us. For me. Okay. This will afford us how to go about answering questions in exam as well, because it's still part of what we try to do. Okay. So this is it. Now this is it. I hope you can see my screen. Can you see my
Yes,
screen?
Yes,
yes,
sir.
Can you
sir.
see what I'm okay? Now this is a
I can see
question.
it.
Okay, this is a 2019, May 2019 question on audit and assurance. Like I said, most of us, where we have weakness is how to answer questions in exam. Now, let's look at this question very well. If you look at this question number one, normally is a case study. It's compulsory. Even now, it's still compulsory. Question one is still compulsory. But you have a question like this. Let me just use this opportunity to explain to us how to go about answering questions in an exam, especially audit and assurance. Number one, you need to be able to use a strategy that you're able to maximize or optimize your time for your exam. Now, you have a case study like this. The first thing you need to do is to quickly read through this case study within what? 3 minutes or 2 minutes, within 3 minutes. Just for you to have an understanding of what they are talking about. That's what you need to do. Number two, you read it again. The first reading is for you to have an insight into what he's talking about. Number two is now to read it with what? With more understanding. Now, the second reading will give you more insight into it. The third reading, you're not going to read it with what? With the requirements, with the questions. If you go to the question before reading this case study, I'm telling you, what you have done to yourself is that you have micromanaged, or you have limited your chances of getting all the answers to the question. That's what it means. That's what it does to you. It limits what? The chance of you answering some of those questions with the right answer. So that's the process. So let's quickly read this and we answer that question. Because this particular question, there are some aspects of it that this is what we have done. Okay? Let's read it. Question number one, May 2019. ABC Limited was incorporated on 1st November 2015 as limited liability company to carry out general merchandise business. It commenced business on 4th January 2016. Your firm was appointed as external auditor on 5th February 2017 with a mandate to audit the company's account for the year ended 31st December 2016. Following receipt of the signed copy of the engagement letter from the managing director, your team went to the company to commence the audit engagement. Consequently, the audit manager in charge assigned members of the audit team to the various job schedules as stated in the audit planning memorandum. The audit, which was concluded within the appointed time frame of 2 weeks, was done with a review of the accounting system and the internal control of the company. The following were the accounting systems recorded at the commencement of the audit exercise. One, that is A, income recognition. Income is recognized by the client on the basis of the amount in the sales invoices issued for the goods supplied, and the amount of the sales orders are recognized as income for all the pending suppliers as at 31st December each year. Commissions are paid to the sales executive in the first week of January following the year end on the basis of the turnover figure in the management account prepared by the chief accountant before the year-end audit is done by the external auditors. B, salary payment. Staff salaries are prepared in a register maintained by the accountant from where the salary summary sheet is prepared for submission to the chief accountant for approval. The cashier consequently withdraws cash needed for the salary payment, and the salary due for each staff is put in an envelope. On the payday, payment of salary is done by the cashier, and the staff members are not made to sign for the payment because management believes that the payment process is witnessed by another staff from the sales department. At the end of the payment, the cashier stamps the salary summary sheet with pay stamp, which is regarded as evidence of the salary payment. C, director's drawings. The chief accountant gives approval for personal drawings requested by the directors on the basis of the telephone discussion. Such a director had with him. No separate drawings account is maintained for each of the directors in the general ledger. The accountant only has the considered outstanding balance in the director's drawings account without showing the amount drawn by each of the directors. The engagement partner discovers during the review of the audit file that the following adjustments were passed by the audit manager, which made some of the figures in the draft accounts to be different from those of the management account prepared by the client. One, turnover figure was adjusted by 250 million, which made the figures to 1 billion in the management account drop to 750 million in the draft copy of the related financial statement. B, part of the staff salary, 12 million included in the cost of sales in the management account, was reclassified to increase staff salary figure to 27 million in the draft copy of the related financial statement. C, the director's personal drawings, totaling 50 million included in the cost of sales in the management account, was adjusted and taken to the director's current account, which consequently reduced the cost of sales in the management account to 600 million. D, the managing director disagreed with the firm on the above audit journals passed and gave the following reasons to support his argument. One, the turnover of 250 million that was adjusted said the sales orders received on 30th December 2016 for new supplies to be made in the following year.
Protector.
He said that his decision to recognize this amount as income in the year 2016 was to help the company reach a turnover benchmark of 1 billion required to competitively bid for government contracts. He also said that the commission on sales has been paid to the sales executive on the basis of the turnover 1 billion disclosed in the management account. Staff salary of 12 million was included in the cost of sales so as to reduce the payee tax to be paid by the company. 3, the director's personal drawings of 50 million was included in the cost of sales so that the amount could be hidden from the company's shareholders. Both directors refused to sign the financial statement because of this agreement that occurred on the above audit adjustment. As the audit senior in charge, you're required to highlight 5 major content to be included in the letter of engagement or in the engagement letter. So what do we want to bring out from here? What I just want us to look at are the 5 major content to be included in the letter of engagement or in the engagement letter. That's what I just want us to look at. The other ones is not part of what we are discussing. We are not discussing internal control. But that letter of engagement we have talked about, we have talked about content of it, right? So we can look at it. So without further ado, I want us to look at it and let's go about it now. Now, when you have a question like this, you saw 10 marks there. They said highlight 5 major content to be included in the engagement letter. What that implies is that you need to briefly talk about those 5 major content. And those are the things that we discussed earlier than now, when we are looking at the content of an engagement letter. So you talk briefly about it, you list them, then you explain it. That's what it means. You get your 10 marks. And when they said 5, if you give more than 5, you will not be giving additional mark because they requested what? 5. And when you give 4 or less than 5, that means that you are not going to get all the 10 marks that is allocated to this sub question. That's what it means. So when you are answering ICANN exam, one of the things you need to bear in mind is that you have to be what? You have to be intentional about it. you have to be able to give everything that you have to work within the time frame one. You need to be able to provide as much answers as possible. And always stick to to the rules, the instructions provided. Okay, so you can see, and how will they know if you have if you actually understood this particular question? Is you are able to relate your questions, your answer to the case study. If you're able to relate your answer to the case study, it will give you additional time, additional confidence, or will give you a good impression before the examiner. That is what it does for you. Okay, that's what it does. What it does to you as as um, as a student. Okay, writing ICANN exam. These tidbits will be coming all the time. Either we're having classes, I'll come with some of these tricks of how to demystify or how to pass audit and assurance because you need it. It's highly important. Okay. So with this, since we have looked at this before, let's quickly look at the answer to it so that we will not waste much time today. We have talked about it, okay? But for us to be on the safe side, let's look at it so that we don't waste time on it. So look at what he said here. You can see it. Engagement letter. That's what we are looking at, right? Content. Look at what they have here. They say you should provide 5. Here they gave more than 5 because this is just suggested answer. But you, in your exam, you cannot give more than 5 because it was stated there 5. If you give more than 5, you might be what? Penalized. So what are the they say major. The first one is the objective and scope of the audit. Have we not talked about it? We have talked about it. Okay. The second one, the responsibilities of the auditor. We have talked about it, right? The third one, the responsibilities of the management. We have also talked about it. Number 4, identification of the underlying financial reporting framework. We have talked about it today, right? 5th, that is V, reference to the expected form and content of any report to be issued. We also have talked about it. In addition to these 5, okay, they have other content that should be contained in that letter of engagement. More of this is what? More details on the scope of the audit, such as reference to applicable legislation, regulation, international standard on auditing, and ethical pronouncement. The fact that because of the inherent limitation, of an audit and internal control, there is an avoidable risk that some material misstatement may not be detected, even though the audit was properly planned and performed in accordance with what ISA. You can see what I'm saying. We are gradually relating the answer to the what? To some aspect of the what of the case study. Arrangement regarding the planning and performance of the audit, including the composition of the audit team. Other content, the expectation that management will provide written representation. Okay? You have not looked at written representation. Written representation is another aspect. Whether you call it written representation or letter of representation, we are still going to look at that in subsequent chapters. Okay? The basis for which fees are computed and any billing requirement. What that implies is that how the auditors compute the audit fee will also be contained in the letter of engagement. Then a request for management to acknowledge receipt of the engagement letter and to agree to its terms. We talk about agreeing the terms and conditions of the what? Content in the letter of what? Engagement. We talked about that earlier. Agreement concerning the involvement of other auditors, experts, and internal auditors or other staff of the entity. And lastly, any restriction of the auditor's liability where such possibility exists. Hope you have seen it. Any question, any comments, any observation. This is a method of what? Of answering ICANN question. It is so easy as that. Okay? It's not difficult, but most time is that we don't have the patience, okay, to read, to understand what it entails before we start. And that's why sometimes we just write anything that we like, and we think that we are going to be magnanimous with what? With the marking. It doesn't happen like that. You can see the answer to that question, the A part, the one that relates to what we have done. Okay, it relates to what? What we have done today. I hope it is clear. Another question they may ask is, as an auditor working in an audit firm, a new audit staff joined the audit firm, and he has asked that he wants to understand how the audit firm determine what the audit fee they should charge their clients. That a junior staff or a newly recruited audit staff has met with you, and they would like to know how the audit firm usually determine what the audit fee is. That could be a question in an exam. We have talked about that today. Okay? So your ability to be able to look at the question, be able to rack your brain around the question, adopt a strategy that you are going to adopt. And anytime you're answering question in the examination, please, as much as possible, let your writing be what? Be very legible. Let your writing to be what? Very legible. It's very, very important. Your writing ought to be what? Very, very legible. So if you have a writing that is not very legible, for the purpose of this examination, always ensure that your writing is what? Is legible. It's very, very important that you make your writing be what? To be legible. Okay? So does anybody have any question, any comment, any observation?
Yes, sir.
Please go ahead, sir.
So my own is just a request.
Okay.
Some of us today we are joining the class, and I think the topic we just treated now is in chapter 3. That means that I think other topics have been done before now. So I'm
Okay.
requesting if it will help us to share the lecture material for this course, if it can be
Okay.
reshared in the WhatsApp group so that we can have access to it.
Okay. I got what you said, sir. So what I will my response to this, your request, is the fact that what I will need, the class started last week, right? We started last week, and we only done one topic. So what I will advise you to do now is to put it on the platform. As you have explained now, put it on the platform. The respective personnel, right, will get back to you and furnish you with all the information. Somebody requested for this material that we are using today to be reshared, and I was happy that somebody reshared that material. So what I want you to do is that put it on that platform again, as this class is about to end now. Okay, put it on the platform and state your request there. I want to be that somebody will be ready and willing to do what? To assist you with your request. All right? So that is that. I hope I'm able to answer your question, sir. Any other question?
Yes, sir. And also even the past question you just analyzed a few minutes ago, if you can also share it with us, so we can also go
2019,
through it.
May 2019,
Yes, sir.
right?
Yes,
Okay,
sir.
don't worry, I will share that. Then also, before now, let's look at another question. November 2017. November 2017 is what we want to look at now, okay? Let's see. The first one is 2019, right? This one is November 2017. Let me share the question with us so that we'll be able to see it, all right? Thank you. Let me just, because I want us to understand this thing. What we need is just how to go about answering question in the examination. I think that's what we need more. So there's a question here. November 20. I'm coming. I want to put down that particular one I'm talking about, that I will not miss it. I think it's May 2019. I'm coming, sir. Okay. Now look at the, you can see my screen. Look at the question. Question number 7, November 2017. The Companies Hired Matters Act. This one was before the amendments to the CAMA. CAMA was amended 2020, December 31st, 2020. That was when they amended CAMA 2020, the CAMA. This one was before that. This was the last before that. So the Companies Hired Matters Act 2004 requires every company to, at each annual general meeting, to appoint an auditor or auditors to audit financial statement of the company and to hold office from the conclusion of annual general meeting until the next one. However, the auditor may choose to resign his appointment during his tenure. Required. State 3 factors that could lead to auditor's resignation. I've talked about it today. 2, describe the procedure to be followed by the auditor as regards the provision of CAMA in the resignation of an auditor. That also I've talked about it today, right? So because I don't want us to waste much time, let's go to how it has been what is being answered. So there's no much time to be wasted because I've already talked about all of this. Okay, that we'll be able to save some time. The question is question number 7, I'm almost there now. Question number 7, we're almost there. This is it. It's what are the reasons that can be the auditor to what? To resign his appointment. I've talked about it today. There's a lack of integrity demonstrated by management or those charged with governance. Have I not? I have. Where the minimum fees of the service provided by the auditor remains unpaid. That's one. Where the audit firm can no longer maintain its independence, you can see it's also there. Another reason is where the audit is no longer profitable to the audit firm. You have seen it. We have talked about this. Lack of integrity demonstrated by management. What that means is that where the management are no longer seen to be what? To have integrity. That's what it means. Number 2, where the management has refused to what? To pay for the service rendered by the audit firm. That will also make them to what? To resign their appointment. Another one, where they see that there is this close relationship between the auditor and the client. The relationship is so close, okay? Then the independence of the auditor can no longer be what? Cannot be established. The independence has been what? Has been impaired. Then lastly, where the audit is no longer profitable to the audit firm. For instance, where the money spent to carry out the audit is more than what they are going to make. You know, I told us that audit firm, they are established to do what? To make profits. So if it's not profitable to them, they can also resign their appointment. Now, the procedures for the resignation of an auditor as regards provisions of this is also similar to what we have in 2020. I hope you understand. There's no much difference there. Okay, it's just the name. So look at it. I said it also. I said the resignation must be made to the company at its registered office in writing. This is what I said. That means also we write, put up a writing resignation letter and present it at what? At the company's registered office. Okay, the company must to submit the resignation letter to the appropriate regulator, that is the CAC, Corporate Affairs Commission. the auditor should prepare a statement of circumstance. This sets out the circumstance leading to the resignation if the auditor believes that these are relevant to the shareholders or creditors of the company. If no such circumstance exists, the auditor should make a statement to this effect. That's why I said that he either issues the letter of circumstance or not. Then the company should send this statement to the Corporate Affairs Commission within 14 days of receipt. All persons entitled to receive copy of this company's financial statement, okay, the shareholders, unless the commission rules that the auditor is seeking to defame the company. Then lastly, the auditor may require the director to call a meeting of shareholders in order to discuss the circumstances of the auditor's resignation. That's what I talked about. What right to requisition a meeting. You know, I talked about that. So that is that. So I hope I've been able to do justice to this particular question. Okay. This November 20, this November 2017. Okay. So I will share the question now. The Pathfinder, I'm going to share it now. Okay. Both of them. So, does anybody have any question before we call the class a day? Any question? Any comments? Any observation? We are good, right?
Yes, sir.
All right. Thank you so much.